What's up, traders? Zach here from the Trading Network. I hope you all are doing well and that you've had a good weekend. I am back with yet another weekly market profile forecast for both the ES and NQ futures markets. And for those of you guys who are new to the channel and new to this series, what we do for our weekly market profile forecast is just that. We take a look at some major areas, both on the session and weekly market profile charts. I also discuss some major areas of interest that will very likely offer up some high probability trade opportunity moving forward into the week, and some levels that you can use as areas to take trades off of, base your risk off of, and use as targets as well. So without any further delay, let's get into some NQ session profile here, and let's talk about what I'm going to be looking at moving forward into the beginning of the week. So what am I going to be looking at? This area, basically between Friday's high at 13,360.59 to be exact, and the high from the overnight session from April 30th into May 1st, which is 13,370.25. So you can call that a 10-point zone that is created basically by the highs from last week, or the last week of price action. So my thought is, if we can move and hold above this 13,370 area, we are very likely to see some continued further upside pressure into areas and levels that we have not visited in quite some time. Now, I discussed some of these levels. They were back from August 2022 in last week's weekly market profile forecast, and a lot of those levels are still holding true, and I will mention those briefly in this video as well. But one thing that I want to give you guys this week is some major areas that will allow you, if patient enough, to very likely take some good trades from, base your risk off of, and once again, some other areas that you can use as targets. So if we do not move and hold above 13,370, it is very likely that we, in my opinion, see some more significant downside pressure back through the value area of Friday, through the value area low at 13,225, and very likely at the very least down to Friday's low at 13,124. So rejection upon open tomorrow. Let's say that we open up around this area, 13,320-ish. If we can't move and hold above this 13,370 level, look for moves into 13,271, 13,240, 13,225, and lower. Very likely, if 13,225 breaks, I would look for about a 100-point move down to Friday's low. Now, another thing, not to get strongly biased on either side, but I want to bring attention to these naked point of controls that are on NQ to the downside. So if we get some further significant downside pressure on NQ below 13,000 especially, very, very high probability that we get a move into 12,950. So even if you have to wait for price to come all the way down to 13K and break to the downside, that could offer up, or very likely will offer up, a 50-point move at the least, I would say, down to 12,950. And if 950 breaks, I mean, we've got another naked POC down here at 12,856.25, and we could be headed there as well. Now, obviously, we are quite a ways away from these naked POCs, but I want to just plant that seed and let you guys know that that is a possibility. Have we been ranging? Have we had choppy, small, ranging price action? Yes, absolutely. But when price is contracted, price is like a rubber band. It can only be contracted for so long before it eventually expands. So that is one thing that we always have to be prepared for. We have to be prepared for volatility expansion when volatility is contracted, which is exactly what we have seen for a substantial period of time. I mean, I would argue that volatility has been contracted for weeks, perhaps even months. So I want you guys to keep that in mind. The price action, I mean, look, we're in a range between 370 and 12,800. Yes, it's, you know, a decent sized range that's been established over weeks, months, right? But I mean, NQ has moved 600 points in a day for perspective. So I just want you guys to keep these things in mind. The market environment has clearly shifted from strong trending price action, downside trending price action, all of 2022 to tight, ranging, less volatile, lower volume price action that we've seen most of this year. Okay, so without going on too much of a tangent here, I just wanted to kind of get my idea across that we're still operating in range, you know, between 12.8 and 13.370. basically. So move above this does break us out of the range that we have been in for at least a few weeks. And if we continue to push to the upside, we've definitely got a lot of room to the upside, in my opinion, on a macro level. So really just paying attention to reaction to 13,370. And if we reject here again, just really taking small controlled scalps down to these levels and watching and understanding that any of these levels can act as support, right? Price could reject 13,370, come back down 13,240, gain support, and then break back up and make new highs, right? So anything is possible, but understand that if there's clear rejection here, you have opportunity very likely down to 314. If 314 breaks, you very likely have an opportunity for a short down to 271. If 271 breaks, you very likely have opportunity for a short down to 240. Maybe bullish divergence gets put into 240 and you have a long opportunity from 240 back up to 271, right? That's how I'm using these levels on a daily basis. So I just want to continue to remind you guys. With that said, let's look at these weekly charts here. These are weekly market profile charts. Each of these profiles represent 1 week of regular trading hours price action, okay? So that is, this right here is an entire profile for all of the regular trading hours price action that took place last week. This is the week before that, right? This is the week of the 24th. This is the week of the 17th. This is the week of the 10th. So once again, this is the point of control. This is where the most business was done the entire week of April 10th. This is where the most business was done the entire week of April 17th, right? So these are very, very important levels. This is the value area for the entire week last week, right? So if we can break, we can move and hold above this area right here. I mean, we can even pull this down, turn this into a 30-point zone, which really isn't that big, especially on a weekly. And look, there's even low volume nodes up here. Low volume, low liquidity in an area very likely is going to make it easy for price to push above. If price moves back down to here, it's going to be more difficult for price to move back below 13.3K because that is a high volume node. There is substantial liquidity there. That is where a lot of business has been done, which means there are likely still a lot of orders there. Where there are high volume nodes, that makes it more difficult for price to move through. Where there is a lack of volume or low volume nodes, that means it is easier for price to move through. So if price does break below 13.3K, then it's going to easily move down to 13.2K because there's not a lot of orders stopping it. And you can see that reflected in the profile here as well. You can see a similar scenario here where there are gaps or voids in liquidity in the profile. So one thing you guys will notice is that price gravitates back towards areas where there was not a lot of business done or not a lot of liquidity was there, right? So in this lower liquidity area, price came back the next week and filled it in, is how it's referred to. It repairs that area. This is considered a weak area on the profile, and price gravitates to those areas. Price is efficient. The market itself is efficient. It repairs poor structure, and you can see this on the profile. So if I'm doing a little bit of speculating, right, you can see here, very weak structure here, not a lot of business done. Boom, look at the next week, filled in. Next week, filled in again. And this is a monthly volume composite profile, right? So the last 2 weeks, we have started to fill in this area, and that's represented by this node that's starting to get created. But I think there's a pretty darn good case for us coming back into this area, filling this area in, and possibly even, giving 13.2K a test before moving back up. So again, that's just kind of mental masturbation on my end. We got to wait and see what happens at these levels, but we know that there's very likely to be high probability opportunity at these levels indeed, and that is the most important thing. So with that said, keep an eye on this zone from 13,340 up to 13,370. If that breaks, really if 13.3K breaks, in my opinion, I think a test of 13,250, and then 250 breaks, very likely we revisit this 13.2K level. A lot of good confluence between the value area highs from the week of April 10th, the week of April 17th, and the week of April 24th. And you can see that the POC from last week is at 186 as well. So if we really wanted to be, it's not that big of a zone even, honestly. So you could say a break below this zone, very likely, especially if 13.3K breaks, gets us a move to this zone, and a break below this zone at 13.2, in my opinion, likely gets us a bigger move towards this area, basically another 100 points down into this POC from the week of the 10th, which is also the value area low from the week of the 17th. Some weaker structure here from the week of the 24th, and then not too far off from last week's value area low at 116. So these would be the three zones that I would recommend keeping an eye on moving forward on more of a macro view on NQ this week. So with that said, let's look at the ES session profile first and foremost. You can see that we are right here, 41.48-ish at the moment. We do have a naked POC on the upside on ES, which is a little bit different than NQ. So there is a case for ES leading and pulling NQ up with it into this naked point of control. Now, again, just some speculation, nothing concrete as far as that goes yet. We got to see if we can get acceptance above 41.63 first and foremost, which is really going to be my line in the sand level moving into tomorrow's regular trading hour session. So you can see the high from Friday, 41.63 and a quarter, the high from Wednesday, 41.67 even. So this is going to be a very important area to move and hold above, basically between 41.63 and 41.67. There's also a regular trading hour session high from the 27th of April there as well at 66.50. So there are three session highs within basically 3 or 4 points of each other spanning the last week. So if we can move and hold above that, very likely we get about a 25-point move up into this naked POC, which is immense opportunity on ES. 25 points. I mean, you could lock in 25 points and be good for the week on ES. That is an amazing trade opportunity right there. So look for reaction, look for acceptance above 41.66. If we do get acceptance above that level, look for a move about 25 points, once again, up to 41.8850. Now, rejection below Friday's high, rejection below Wednesday's high, very likely gets us back down to retest the value area lows from those sessions. You can see here great confluence once again between the value low from the 3rd and the value low from the 5th. That is the value low from Wednesday and the value low from Friday. 41.2650 breaks to the downside. I'll be looking for a move about 10-15 points down into this 41.10 area. And if 41.10 breaks, I am looking for a move into 40.90. That's the overnight point of control. Also, we have a session high from Thursday at 98 and a session low from Wednesday at 95. So this zone, call it like a 5-point zone or so, that's going to be a very important area. So as you can see, there's a lot of stacked up market profile levels, and you can create zones with these stacked up profile levels, whether you're trading on a session profile basis or a weekly profile basis, and you can essentially just trade from profile zone to zone. And we will be actually releasing a tool called Market Map, which automatically plots market profile levels and takes it one step further and algorithmically clusters these levels using specific machine learning algorithms to give us high probability zones to trade off of. So I am super stoked for you guys to get your hands on that. That is going to be one of QuantSuite's first indicators. In addition to our automated trading suite, QuantSuite will also be releasing some indicators as well. So keep an eye out for our Market Map. We've been working on that for probably like 6 or 7 months, and it is going to be a game-changing tool. It will also automatically plot current intraday real-time market profile levels as they move as well, which is pretty sick. So with that said, that's the story that I am looking at on ES. Really just want to see reaction to Friday's range overall. Above Friday's range very likely gets us to 41.8850. Below Friday's range very likely gets us to 40.90, and honestly lower back into Thursday's low as well. So that will give you guys some good trade opportunity. Keep an eye on these levels. Be patient, wait for reaction at these levels. And because price is less volatile, because price is slower moving and there's been less volume, it might take longer, as I'm sure you guys have already seen, for your trade ideas to play out. So be patient, stay picky, and that will keep you surviving in these type of market environment shifts when we go from a big trending market into a small, choppy, ranging market environment. So as far as the ES weekly chart goes, look at this range. It's hilarious, honestly. I mean, We have a very, very important zone between 41.90 and 42.06. That is basically the weekly highs from the last month, okay? So a break below 41.90 very likely gets us a bit of a bigger move, in my opinion, into this 41.63 area. You can see we have stacked up value area highs from the week of April 10th, the week of April 24th, and our value area high from last week is at 41.47, so a little bit below that. That is where we are operating right now. So it's going to be very interesting to see what kind of reaction, if we do retest the highs from last week, or if we get rejected from value of last week, right? That's a definite possibility as well, where we open up and we struggle to even move back up to 41.63. So as of right now, we're going to have to see if we can move and hold above 41.60. If so, very likely testing the highs, but if not, very likely going back into this 4100 area. Once again, POC right here from the week of the 24th lines up with the value area low from the week of the 10th. And then we've got weekly low, 40.98, which we just saw on the session profile as well. So 4100, very, very important area. If we get rejection, especially a break below 41.35, that's the low from the week of April 17th. Look for, I would say at least another 20-point move down to test 41.10, 41.13-ish. So that is my story, my friends. I am sticking to it. Let's hop on over to the weekly chart real quick just to look at some macro candlestick structure, and we will wrap things up. All right, so here we have the weekly chart on NQ. Not a lot has changed. I mean, not a lot has changed in the last 6 weeks, right? 1, 2, 3, 4, 5, 6, hopefully not 7 weekly bars, but we have a very, very tight range here, okay? It is observed. We have been sitting in this range for the last month and a half, right? So my thought is if we break out of this swing high here on the weekly, we're headed to the next swing high, which is basically 13,907. And the wick high of this weekly bar from August, this is August 19th, that is going to be at 1458, call it 1460, right? So my opinion, if we can move and hold above 13,350, then we're very likely to get a move to this zone around 14,060. We could get an extension. Yeah, 14,060. That's the wick high here. The body of this bar is 13,895, call it 13.9K. So 13.9K up to 14,060-ish. I think that is a very, very likely area to see upside pressure to if we can break this swing high. Now, I want to just talk to you guys a little bit about why I feel that way and why I think that is a high probability scenario. That is because there's very likely a lot of shorts and short stop losses above these swing highs, right? When an area presents itself as very clear resistance, retail traders gravitate to it and they load up short trades and they have their stop losses typically right above their entry. Now, on a weekly basis, this is also involving some larger time frame players as well. So not only is there a ton of retail liquidity, there's very likely a lot of other time frame player liquidity or larger player liquidity as well. Now, what I will say is if we can run stops that have been accumulated over weeks, months, I mean, there could be stops above here from back in September, right? Consider that liquidity has been building above this area for 6+ months, okay? That is going to create a chain reaction of stop losses being run. And I think that, I mean, this is just the beginning if we do start to get that move. I know it's like 700-800 points, but I mean, we could be up at, in my opinion, 15.5, 15.6 pretty quickly, 15.2, right? If we start to run some liquidity. Now, we always got to talk about the other scenario, which is quite possible as well. We've got a trend line to the downside. So if we come down and we close a weekly bar below last week's low at 13,000, remember me talking about that level basically this entire video, we're very likely to move back down into 12.8. 12.787 is the wick low of this bar right here from April 28th. That's the weekly bar from April 28th. So that is a very likely target to the downside if we get further downside pressure. Tapping that low of the last weekly bar, basically at 13,000, and then follow through with a weekly close below that low, very likely gets us, I mean, at least a move to 12.8. I would say 12.650, not unlikely. That is basically a test of the weekly 50 and 21 EMAs meeting up. So we are really in a very interesting spot. You know, price is coiling up for the next big move, whether it's going to be to the upside or to the downside. That certainly remains to be seen, but we have to be patient. I'll pop on over to the daily chart as well so you guys can see this trend line. But the daily opportunity zone is intact, right? We are bouncing in the daily op zone. And if you guys have watched my scalping videos, you already know how well the op zone works. I mean, let's just do this real quick. 377 tick chart. Look at these op zones from Friday, just smacking over and over and over again all day, just playing the op zone. You had to be patient, catch some good ones, but you see when price starts to trend, it really, really respects the opportunity zone. This is on a 377 tick chart. Now we're on the daily, right? It's the same exact thing. The same exact pattern repeats itself regardless of the instrument, regardless of the time frame, regardless of the tick chart. Doesn't matter. So I just want to, again, drive this idea home that when you see your A+ setup, I mean, this is a high probability trending setup, but we are not trending yet on the daily, right? We have to break back out of this range. We are in a range from 14K down to, 10.7, basically. We're still within range if we are being very, very picky. Once we break 14,050 to the upside, that, in my opinion, is when we are truly breaking structure on the daily, on the weekly, and we have broken out of the range that we have been in for a very, very long time. I mean, this is May 9th, 2022 back here. This is a year of price action. We've basically been just chopping around in this area. Yes, this is a large range between 14K and, 11K, but we got to break 14K, and we are not far from it. NQ can move substantially in a day. ES can move substantially in a day. But even if it takes weeks or months, just watch and see if we can break above here, break below here. And if not, then we're basically just in a macro range. So keep that in mind. I don't want to go too crazy as far as, a tangent goes or any sort of projections or anything like that. But I mean, really, when it comes down to it, if this is a 377 tick chart, I'm probably taking longs down here, taking shorts up here, and then waiting to see if price breaks above this level and can use it as support. And then I'm taking longs. And then we have actually broken out. And same here. Until we break like 35.70 to the downside on ES, we're technically not in any sort of macro downtrend. We haven't broken out of the range. And I think that is why this type of price action is so difficult for people. I mean, look, since December, here's our range right here. Super tight, right? So even if we break 42.40, right? That offers up a move back to the top of the range of 44. Okay, same thing on NQ. So this is how you guys can understand the market environments on a macro level and use that to your advantage on a micro level, and vice versa. You can understand your environments on a micro level. I know I'm going a little crazy here in this video because we're doing a lot more than market profile analysis. But look, here's a range on the 377 tick chart. Just be patient and wait for price to break the range, and boom, you get some trending moves. But you can say, I am not trading this zone, or I'm only taking longs at the bottom of this zone, only taking shorts at the top of this zone until the top breaks and acts as support, or until the bottom breaks and acts as resistance, right? This is actually kind of piggybacking off of a video that I just recorded before this, which is talking about creating no trade zones. So somebody asked in the TTN community how I establish no trade zones and if I could create a video talking about the concept of having no trade zones, the concept of basically just having a plan, having some sort of contingency plan, longs at the bottom, shorts at the top until or unless that breaks. Then you have a plan. I mean, look at how perfect this break and retest was, this support resistance flip. Yes, it took a while, but it was perfect. Textbook, and this is how it happens on any scale, whether it's a 377 tick chart or whether it's a daily or a weekly chart, right? Same thing. Boom, look, range, longs here, shorts here, until we break out of the range and start using the top of the range as support. My friends, this is not complicated stuff. You just have to be patient. You have to understand that the market gives us information. The market gives us information on a level that it might not be telling us, hey, take a trade right now. It might be saying, hey, sit on your hands until or unless something happens. And that is why having a no trade zone and just having a plan, whether it's a weekly market profile forecast, whether it's a daily market profile trade plan like we release in Facebook, it's so important to have an understanding of or from that bird's eye view, seeing things from a zoomed out perspective and creating a plan, establishing parameters to say, I'm longing above here, I'm shorting below here. Until that happens, I'm sitting on my hands and I'm staying in cash. So stay tuned for the video that I'm going to put out probably tomorrow that discusses the concept of a no trade zone and how you guys can have no trade zones or establish contingency plans right upon the open. It is amazingly simple and it will change your trading game. I almost guarantee it. So with that said, this video is probably going to be 10 years long, so I'm going to wrap it up here. I want to thank you guys, as always, for taking the time to watch this content. If you do find value in it, I would greatly appreciate it if you would like, subscribe, and click that bell notification to be notified every single time we post videos here on the channel. If you guys want to learn more about what we do here at The Trading Network, check out thetradingnetwork.io, where you can purchase access to our most popular product, the TTN Pro Trader Bundle, which includes lifetime access to our private Discord where we live stream Monday through Friday at 9:30 a.m. Eastern Time. It is a two-way live stream, so members are encouraged to join the stream, turn on their microphones, and chat with myself and the TTN Pro team in real time while we trade on a daily basis. It also includes access to our Fundamentals of Futures Trading course, where I teach not one, not two, but 3 strategies for varying market conditions. I teach a trending strategy, a ranging strategy, and a reversal strategy, so you can have different plays in the playbook for different environments. And last but not least, it also includes access to our proprietary indicator package, which includes many of the indicators you have seen on chart today. If you guys have any questions about any of those products, please feel free to let us know. You can email us at info@thetradingnetwork.io, and we will get back to you as soon as possible and help any way we can. For those of you guys who are looking for a more tailored or catered experience to your specific strengths and weaknesses as a trader, I also offer one-on-one mentorship in the form of a 4-week program and a 10-week program, and you can learn more about those programs on our website as well. Thank you guys one more time. I appreciate you very much, and I will see you in the next video. Cheers.